Overview: Jinxin Technology Holding Company, incorporated in the Cayman Islands, is a leading digital content service provider in China, specializing in offering AI-driven educational content for K-9 students. The company plans to raise $8.46 million through an IPO by offering 1.88 million American depository shares, ADS, at a price range of $4 to $5. Each ADS represents 33.75 million ordinary shares, and the IPO will be listed on the NASDAQ exchange. Business model: Jinxin Technology provides interactive and intelligent digital educational content through its flagship app NAMI IPO and partnerships with major Chinese telecom and broadcast operators. The company digitizes textbooks primarily used in primary and middle schools in China and offers self-learning materials and leisure reading content. The platform's AI, AR, VR, digital human technologies help enhance user experience by making learning more engaging and interactive. The company's core offerings include: 1. Digital textbooks, authorized by leading Chinese textbook publishers, primarily covering Chinese and English subjects for K-9 students. 2. Self-learning materials and leisure reading, created in-house to diversify content and cater to different learning needs. 3. NAMI IPO app serves as the platform for delivering educational content, with options for free access, subscriptions, and premium membership. 4. Partner networks, distribution through telecom and broadcast operators, as well as partnerships with hardware manufacturers, e.g., intelligent TVs and digital pads. Financials: 1. Market cap, $291 million. 2. Revenues, $53.5 million, last 12 months. 3. Net income, $11.8 million, last 12 months. Jinxin Technology has shown steady financial growth, increasing its registered users from 29.9 million at the end of 2021 to 39.5 million by the end of 2023. The company's net income also grew from RMB 55.1 million in 2022 to RMB 83.5 million, $11.8 million United States dollars, in 2023, demonstrating robust performance despite regulatory changes in the online education sector in 2021. Risk factors: regulatory uncertainty in China. The Chinese online education sector has faced intense scrutiny and regulatory changes, especially since 2021. These changes could impose additional restrictions on digital education platforms, negatively impacting Jinxin's ability to operate, expand, and generate revenue. Dependence on K-9 education sector. Jinxin Technology's core business is heavily concentrated on K-9 education. While this is a large market, 150 million students, any regulatory or market changes affecting this segment could significantly impact the company's financial health. Diversification beyond K-9 education will be essential to mitigate this risk. Market saturation and competition. The online education market in China is highly competitive, with large players such as TAL Education and New Oriental dominating the space. Jinxin may face challenges in growing its user base and differentiating its offerings from well-established competitors. Additionally, competition from foreign platforms may increase over time, further squeezing margins. Reliance on third-party distribution. Jinxin distributes a significant portion of its content through telecom and broadcast operators and third-party devices. Any disruptions in these partnerships or unfavorable terms could limit Jinxin's ability to reach end users, slowing growth and impacting revenue. Potential for slower growth. Despite growing its user base steadily, Jinxin's growth rate could be challenged by saturation in the K-9 digital content market, increased competition, or a slowdown in digitization within the Chinese education system. The company's ability to maintain its growth trajectory will depend on its capacity to innovate and expand to other age groups or regions. Exchange rate risk. Since the company operates primarily in China and reports revenue in RMB, fluctuations in exchange rates, especially between RMB and USD, could affect the company's financial performance when converting to USD, especially as the company seeks to raise funds in the US market. Relatively small IPO size, Jinxin Technology plans to raise $8.46 million, which is a modest sum compared to other tech IPOs. This may not provide sufficient capital to fund expansion efforts or cushion the company against future losses or financial challenges, particularly if market conditions change. Technology risks. Jinxin's success hinges on its ability to maintain and upgrade its AI, AR, VR technologies. If the company is unable to stay ahead in technology advancements, or if competitors develop more advanced solutions, it could face reduced market share and diminished user engagement. Educational content limitations. While Jinxin has strong partnerships with textbook publishers, any disruption in these relationships, or failure to acquire new content partnerships, could reduce its competitive advantage in providing high-quality educational materials. Additionally, the digitization rate of textbooks in China remains low, and Jinxin's ability to capitalize on this market will depend on widespread adoption of digital textbooks. User growth and retention. The company's success is based on the large user base it has built through NAMI IPOs. If user growth stalls or retention rates decline, particularly as competitors emerge, Jinxin may struggle to generate sustained revenue. Conclusion. Jinxin Technology is a promising player in the digital education market in China, particularly within the K-9 education sector. With a strong AI-driven platform and partnerships with major telecom operators, the company is well positioned to benefit from the continued digitization of education in China. The IPO presents an opportunity for investors to capitalize on the company's strong growth trajectory and its proprietary content generation engine. However, potential investors should be aware of the regulatory risks, market competition, and the company's reliance on external distribution channels. Jinxin's ability to maintain and expand its user base while adapting to changing regulatory environments and advancing its technological edge will be key to long-term success. Given the small IPO size and the risks outlined, this IPO may appeal to investors with a higher risk tolerance looking for exposure to China's growing digital education market.